Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets and the news that moves those markets. And we're going to jump right in on Wednesday following the FOMC minutes release, which obviously was no new news, just waiting for those minutes to come out. So nothing traumatic in the markets today on the heels of the information that everybody already had. But I do want to start this week a little differently, and Robert, throw it over to you. What's going on with the U.S. dollar?
Well, while everybody's been focused on what Trump and Pelosi and Schumer have to say, the U.S. dollar has somewhat quietly been moving lower. In about a month, the dollar's lost almost 5% relative to the Japanese yen. In the last few days, it's been moving lower relative to the euro. The euro-dollar pair has pushed up above 1.15. I think about a month ago, we said it was going to about 1.18. May have a little bit of a pullback or a big pullback from here, but still, I think the euro is going higher because of the fundamentals we've talked about on this show, such as the European Central Bank stopping their quantitative easing program. So that's put downward pressure on the dollar, and it has not put any real significant upward pressure on gold, but gold has been bouncing around at the 1280, 1290, 95 range, and it's showing good strength holding in that level.
Yeah, Robert, I'm glad you bring up the gold price there at the end, because you're right. You know, we talked about this range last week, that we'd come up to this 618 fib. We'd probably sit here for a while. We did have that great discussion in the comment thread of our show last week by a couple of our listeners that I thought was a pretty interesting argument on both sides. So worth going back and reading.
And we haven't come down. You know, that was what stimulated the discussion, is that you're expecting a retracement in the gold price to come down to some support levels. And whether or not we see that, I guess we have yet to play out. So that argument debate between our listeners has yet to be settled also.
Yeah, and we're not bearish on gold. Let's make that clear. We had comments from last week's show. We're not bearish on gold. Gold is going to move higher. One of the main technical reasons why it might pull back a little bit from here is it has had a $100 run in the last month and a half. Technically, any market that has a good run like it just did, it went on a pretty nice A, B, C, D, E pattern, the E finishing around 1295. It's due for a little bit of a pullback or a respite before it moves higher. So it is healthy, and we are bullish on gold, period.
Yeah, I totally agree. And you know, again, to see those retracements on this show, the reason we focus on the technicals is for entry points, right? Or maybe you have to liquidate a little bit and an RMD out of your IRA, and it can be good for exit points. But that's why we're helping to explain the whole big picture to it, but over the long term, the macro picture, death, taxes, and inflation. And that means gold goes up over time.
I think we're at a fairly crucial point with gold and the dollar. This line that we've drawn for the last year or so on the dollar index chart, we'll draw this line again. The dollar is pushing down right on top of this line. This line that we're talking about is a breaking point when the dollar actually broke down a year and a half ago or so. It's flirting with trying to figure out which way it's going to go, and so we're going to be watching it closely in the next couple weeks.
So heading over to the white metals, silver's following suit with gold. Same thing, just a couple weeks behind, right? I mean, it moved up to that 2017 low. We're seeing the same kind of consolidation. Obviously, silver has had a heck of a move up ever since it broke out of that range. So platinum and palladium, on the other hand, finally did something. Well, palladium's been doing something for years now. Platinum played catch up. Platinum had a nice big jump up. You know, it'd been bouncing above that lower increasing trend line, that sort of wedge pattern. Platinum had about a $45, $50 jump up over the last week. Palladium had like an $85 or $90 jump up. I think we're at $1,300 on palladium now at this point. Palladium continues to lead the charge in the precious metals. Our question continues to be, there'll be a time where we see that rebalancing of things, the seesaw swing the other direction, and obviously we'll keep an eye on that. For those of you still sitting in palladium, congratulations, although with platinum moving up, we didn't actually see much of a ratio change. So I still think the correct move is moving from palladium into platinum with anticipation of those playing catch up against each other. So following on the heels of the dollar and the metals, where's the Dow going over the last week, following its 20% loss last quarter?
Happy days are here again. What are you worried about? It's going up, man.
Sure, up 10% from the bottom now. I think got about 11% more to go till it gets back up to the original levels. But yeah, the Dow's had a nice rebound. Doesn't mean anything to me. because anybody who was in those positions previously, which is everybody, nobody was adding to positions.
I had a great listener question that called me and left me a voicemail, actually, and he was pointing out the fact that we were mentioning the Dow came up just short of a technical bear market. And his point was, if you looked at the futures the night before and being down 700 points, it actually did put the Dow into a technical bear market. So really interesting point. Appreciate that phone call and you listening, but just know that, yeah, we're working off of market closes.
It'd be good to note that the last crisis, the stock market peaked a full year before the stock market actually rolled over and we had a crisis. So we've maybe probably put in the peak for the stock market. So how long does it take? It may be another, 7 months, 8 months, a year from today before we see the market really rolling over. Maybe it doesn't roll over. Maybe good times are here again. But if we have peaked, then we're probably going to see this relief rally that we're seeing right now. It's going to bounce up, going to bounce around, and then probably roll over. I mean, that would be what you would expect in a topping pattern.
Yeah, because this isn't a healthy retracement at this point yet. You haven't undone what needs to be undone fully, and that's okay again. We talked about that with the retracement in gold. It's healthy to see retracements in all markets, especially as Miles points out using that stair-step analogy. What's wrong with a stair-step? What's wrong with taking a step or two down so that you can climb 3 or 4 more? Nothing.
And in reviewing the stock market action back there before the crisis, reviewing the gold action, after you got right into the crisis, once you really came into the full-blown crisis and gold performed, from bottom to top, gold went up about 150%. Let's say it does that again. The bottom at 1,050, 150% from there is what, 2,700, 2,600? Well, that's just ironically where if you use the government statistic on inflation, which I think most of our listeners would probably laugh at using any government statistic, especially for inflation. But let's say we use their number. It's somewhere, if we adjust for inflation, gold would be somewhere priced. I think I heard Dave McAlvany say around 2,600.
That's right.
So there you are. That's where it actually probably should be already. And so I think it's going to run farther than that this next time because each crisis has become bigger and bigger in the last 30 years. But yeah, you see what I'm talking about there. I think we're going towards that inflation-adjusted number and probably much higher. Where does that put silver? Reviewing silver from the bottom to top, what did silver go up? Like 300, 400%?
Right.
So it's not out of the realm to see returns like that. And I think what that's going to do for our clients and people who are getting into the metals right now is you're establishing a cost basis in this range. If you're going to be buying, which I think you should be aggressively, you're going to establish a cost basis that ultimately is going to look really, really silly to think that you didn't buy more at these levels.
Well, especially, Robert, when the ratio, Miles talks about silver performing so well here in the short term. That's driven the ratio down, gold to silver, from 88 down to 81. If we're at $2,600 an ounce, let's say that silver's just doing what it should and it narrows that ratio to 50, right? We get halfway there. You're looking at $50 silver. And to your point, again, that's a 4-fold increase.
Well, and you guys are forgetting the big one too, because that puts platinum at what, 4,000? So let's not forget the importance of those ratios. Yeah.
So we're talking about growth here in the metals market, 150% bottom to top with gold and 300 to 400% bottom to top with silver. That's not the primary reason that we tell people to buy gold.
Thank you.
Right? So let's state this. The primary reason to buy gold is an insurance policy. It is a foundation in your portfolio that is independent of any other counterparty risk. It's a foundation in your portfolio that you should always own metals. What I think is coming this year, strongly this year, and probably leading into the next few years, is you're going to see growth in the metals market. That's going to be a growth component that we're not always looking for with owning metals. We're looking for, again, primarily insurance, foundation of a portfolio. But we're going to see growth in the metals market, and that's what's going to be fun. So if you're looking at the market today, we have values that are out there. We have specific recommendations. One of them that we recommended about a year ago, the premiums jumped about $50 an ounce just last week. And so if you want to talk about it with us specifically, we can make recommendations for you. Give us a call at 800-525-9556. You can follow us on Twitter at ICA Gold, like us on Facebook, McAlvany Financial, or go to our website, McAlvany.com.
Thanks for listening.
Have a great week.